Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. It's Friday, and as my friend Shikhar says, thank God it's Friday. Today's episode is special not just because we are ending a very eventful week, three central bank meetings, and a fair bit of volatility. It's also special because we will be hearing more from another host of Almus Market Mornings, our very own Shikhar. Good morning, Shikhar. Great to have you with us. What's your take on this week's events? BOJ hiked, Fed somewhat dovish, and the BOE's rate cut. What's your reading?
Hey Swaraj, yes, good morning. And yes, indeed, with so much of volatility and things to digest in terms of market this week, the market participants must really thank it's Friday. And yet, the show is still on with key numbers for the US economy due only late evening. Just to be a bit more obvious in these uncertain setups, like you mentioned, markets had to face three central bank decisions, and all of these are important for the currency market as well as the broader financial markets. The BOJ did surprise everyone the most with a rate cut which was anticipated by a few but not majorly. US Fed lessened the uncertainty about their first move to cut rates, and UK central bank, who till recently were expected to hold rates unchanged, cut the rates by 25 basis points to 5%. And it was expected that this particular move would put pound under pressure, which happened. So the BOJ hike, US lessened uncertainty, and the UK central bank cut. Now, this was not just all. To top it all, we have the ongoing elevated geopolitical concerns after the Israel counterattack, which reportedly killed Hamas military chief in Tehran. Now, since then, there have been several calls by the Iranian leader to plan a strong attack on the Israel. And the Hezbollah leader now says that the battle with Israel has entered a new phase. Now, there's a heck of a lot of uncertainty which is going on in the financial markets. This was broad overview, but if I have to move around specific movements, then we had a lot of movements in the market in all segments rather. Most striking of them all was the big fall in the US Treasury yields, a measure a lot of market participants used to gauge or play their expectations or sentiments on the possibility of rate cuts or hike by the central bank. The 2 year fell quite significantly to trade as low as 4.15, while the 10-year yield, which also fell, is now trading below the psychological 4% mark, a level last traded in the month of Feb, where the market participants were discounting six rate cuts, which is now, as of now, only three. For the 10-year benchmark yields, as we've been talking about, the big support levels can be somewhere around 3.8%. And apart from the bond market, the economic data from US or the Europe also did very little to cheer the people except for the ones trading in the bonds. The job market, which we've been talking about for a while earlier, which was really hot for the US, has started showing a lot of signs of pressure. The lower job opening numbers, the private payrolls falling, the number of people claiming to be jobless or asking for the jobless insurance at a new high for this year. Now, all these are good measures or good gauges to show how the jobs market is performing in the US. Even the manufacturing sector, which reported weakness in all parameters, showed their headline numbers lower, which is lowest since 2020 June. Basically, in the last 4 years, we have not seen such manufacturing headline numbers. So all of this is also happening along with inflation moderating. So even though inflation moderating or cooling down is a positive thing, but rest of the parameters for the economy are really in a lot of doldrums. So really, the Fed view on the economy and policy response should be doing or going under daily review And it wouldn't be much of a surprise if Fed comes up with a rate cut larger than expected, probably a 50 basis point, as they may fear of being behind the curve. Among other regions, China is yet to show any signs of recovery from the slump, while Europe, as many economies, show slowing signs, with Germany contracting even as inflation was higher than expected. This actually triggers these stagflationary pressures.
Very interesting, Shikhar. I think you mentioned in the start of your podcast that there has been major movements in all segments. What about movement in yen and equities? We have been seeing. Any thoughts on that?
Yes, Swaraj, indeed. Yen, for that matter, has been moving quite significantly. And if you'll see, Wednesday itself, we had a 3% fall in USD GPY, which is now moving towards the new cycle low of 148.5, seen in the Tokyo time yesterday. Later, we saw in a big fall in the yen process as well. Now, this time it was with the currencies like Euro, GBP, and AUD. If we had thought that this move of yen was enough, US stocks had even better swings. And this was in particular, or rather very well seen in the tech stocks whose valuations are sensitive to the rate uh, movements. Uh, During the Fed period or on the Fed day, the tech stocks rose almost 2.7, and yesterday they fell more than 3%, which is kind of a reversal of the whole day's action. It was a day of carnage in many of the markets, in not just US. We saw it in Europe, Japan, and most of Asia. So the stocks appear to be exhibiting a less of rate cut euphoria and more of concern about the state of US economy or their own nation's economy. And to caution, if you think that rate cut prospects brightening will see a fresh rally in stocks, folks, it is actually a cautious sign, because apart from the valuation concerns, rate cuts have been discounted right from the month of December in the last year. And since then, we've already seen market gains of 15%. And that's not it. Historically as well, rate cuts have been followed by a round of correction in the markets. But having said that, it's not that all the markets are really active. Swaraj, I mean, if you will see, or if you are in search of calm, you should come and trade in USD-INR. You did not have to go too far. All these activities had no major impact on the USD-INR as a currency. Although Nifty made another new high in domestic terms, but how long will this exuberance or vice-like grip on the currency from the central bank will continue is something that is being guessed by the market participant. So that's it for today, folks. From me, Swaraj, what do you think?
Thank you, Shikhar. And I think the moves in the market currently somewhat remind me of the soap we see in the Indian television. There is so much going on: geopolitics, politics, yen carry trade unwind, rate cut prospects, all manufacturing and job sector. There's data that's weakening over there. So there's a lot happening. And amongst all of this, there is INR, which has been quite stable and range bound for quite a while now. So very interesting. And thank you, Shikhar, for being on today's podcast. And thank you to all of you for listening. We'll tune in on Monday for the latest in the financial markets.
Just one thing, actually, it's a very good remark, Swaraj. I think more than soap, it kind of shows me USDINR is like those Bollywood or the Tollywood heroes, which is unfazed by the numerous activities in
Yes.
the background.
Yes.
So yeah, that's quite a good reference.
Yes, absolutely. So thanks everyone for listening, and we'll see you all on Monday for the latest in the financial markets.